All right, guys, this is Simon Simaan, owner and broker of the Simon Simaan Group right here in beautiful Orlando, Florida. The market is so hot right now, I have no time to go to the gym, so I brought the gym to the office. Today, we're talking do's and don'ts of a mortgage. And we're here with the mortgage guru, Shahram Sandhi, to talk to him about what to do, what not to do. So without further ado, I already burned about 1,000 calories. Let's go talk to the mortgage guru. Shahram.
Hey Simon.
How you doing, man? Good?
Good. Good seeing you.
So I get this a lot. Like, clients ask me, like, what should I do? What should I didn't do in the whole mortgage process? Can you explain, like, the do's and don'ts? What should a client do?
Well, the do is make sure that you've paid down a lot of your credit card. For example, if you got a credit card with a $5,000 limit, even though you paid off every month, make sure you don't carry a balance when the statement comes out. So that normally is the number one factor for lowering your credit score. Don'ts, during the mortgage process, don't go and get a new car.
Don't buy a Mercedes.
Don't buy a Mercedes. Don't go and get a new credit card. Don't go and buy new furniture for the house. Especially furniture is one of the big factors.
Killers.
Yeah, the deal killers, because the furniture places take so long to deliver furniture. So people think, let me go and order it now because it might take a few months. You don't want to do that because that can affect your debt to income ratio. Now, obviously, if you make a lot of money and your credit's excellent, then who cares what you do because you're still qualified for the mortgage. But if you are the average person where your income, your debt to income ratio is borderline, you really want to be very careful with putting anything on your credit cards or shopping around even with your credit card, with your credit.
Yeah, so no crazy spending. And what you don't want to do is piss off your boss, right? Because what will happen if you piss off your boss and you get fired?
Then you lose your job. Yeah, don't switch employments in the middle of a transaction. The most important part about the employment is as long as you're still a full-time employee, you can go from one company to another company before you apply for a mortgage. But once you apply for a mortgage, you want to stay with the same company.
Once you go from like a W-2 to like, self-employed,
they don't care. You could go from W-2 to self-employed making $1 million. They don't care. As long as if you haven't been self-employed for 2 years, they won't calculate any of your income.
All right, so we learned a lot today. Don't piss off your boss. Work out. It's good for your body. Keep your blood pressure low, especially in the stressful real estate market. Maintain good credit. Don't overspend. Don't go to Vegas. Look, we can party after closing, but before closing, best advice, talk to your realtor and talk to your mortgage lender before you do anything. Hey guys, every home has a story. Let us tell yours. Make sure you like, comment, and subscribe, and check us out in the next video. Until then, let's go.